We had the best broadband quarter in 10 years, 363,000 net adds. We now have a gigabit of speed available, more than any other company in the U.S. To every one of our customer homes is availability of the fastest internet that anybody has. And we had the best EBITDA quarter in cable in 6 years at 7.6%. And our free cash, or net cash flow, grew 15.6%, and it's the third consecutive double digit. So the core business is really showing great momentum. It's been that way all year, and I think Dave Watson and the team are doing a sensational job. At the same time, at NBC Universal, the television businesses, cable and broadcast, were up 6%. We knew we had Despicable Me 3 last year, so film would have a tough comp, but still had a good quarter. And MSNBC, just to pick one cable network, has the largest lead it's ever had over CNN in the key day parts. So the Comcast, NBC, and Universal, I'm really thrilled with the third quarter, and I think that's why we were able to beat a lot of expectations.
Brian, you referenced this at the top, just that there had been some lingering questions about the strength of the business, people wondering if that's why you had been interested in an acquisition. How much of the overhang in the stock do you think was because of that, and how much of the overhang do you think was just because of people wondering about how much you'd pay for any acquisition?
I think there's a lot of, when there's uncertainty, it's tough for investors, and I understand that. And when you're making a big bet that may or may not happen, may or may not be the right thing to do, there's uncertainty with that too. So the good news is I think this feels like a new beginning. The momentum from cable is powering the EBITDA and the free cash flow for the company, new subscriber growth. But now that Sky's resolved, we really are better together. And if I might, I would take a couple points about Sky. First of all, it was a competitive process. It took a long time, same for Fox. We ended up winning by about 10%, which is the same margin that Disney beat us for Fox by about 10%. That's what it took. That's what the market was. And I think the value is definitely there, and we'll show that over time. What it does for us is you start and say, is Sky a good business as a standalone company? And it's a fabulous business. It's very different than the U.S. They're not just the provider. They're not just a content company. They are both. 4 of the top 5 shows are all originals of Sky Entertainment. The Sky Sports, Sky News, Sky Movies are on all the platforms from different competitors, and they're really leading the way in that whole, most European markets. It triples our footprint in the television business and doubles our footprint in the broadband space. They're the #2 broadband provider. People didn't really understand that. They're just launching an exciting broadband product in Italy. And so when you put us together, our cable channels and our broadcast channels, we're the top 4. In the top 4 countries where we operate, we're #1 in each of, we're the #1 content producer in each of those countries. And if you look at, in terms of the model that has powered Comcast to have 23 straight years of EBITDA growth, that's the subscription business. Well, that's what Sky has as well. So it adds to our successful formula. So we think together we can do so much more. We have a #1 platform, #1 in U.S. cable, #1 in U.S. broadband, #1 in UK pay TV. And that is great for our partners and content providers and technologists as we go forward. So we're controlling our destiny into the future of that I think looks very interesting and exciting.